Okay, apologies once more. Let's get going. We are just about to start the recording. Right, let's look at dollar. What I want to concentrate on what the indices are doing tonight, and then take a good hard look at gold and the dollar as we get very much closer to the US election and UK budget on Wednesday. So I've got non-farm payroll this week. So the election is going to be quite interesting. Could see a lot of volatility around there if there is any kind of unrest and dispute, etc. Any issues that come out of that. So yeah, this dollar has sprung up, and gold normally goes is inverse relationship to the dollar. So you'd normally expect with a strong dollar, you'd normally expect the gold to be sitting right back, and it's not. When you get these two working together, it is the last time this happened in a significant way is 0708. So this is why I have in the recent past been talking about shorts. Um, because we've had an inverted bond curve, which is a classic, absolute classic sign of an imminent recession. Okay, there's certainly a lot of fear in the market. If you look at the volatility index, I haven't looked at that for a while. So noise aside, let's just pick our way and let's just actually see what the markets are telling us. So I'll stop giving any sort of side commentary for a moment, and we'll just look at what this market telling us. So this time last week, where were we? We were around this 102 mark. Is that right? No. Last Monday we were just at this 103 mark. Yeah. Yeah, that's where we were last week. And I said, talked about if we come underneath 103, then expect this to drop back. If we break that high, then expect this to continue. So all the time we are consolidating here, I would expect this to dip into the sort of 103 mark and then start to march up here. Let's have a look at the 50-day average. So we are somewhat, so when you get a consolidation period, um, the consolidation is normally over after a dip going against the trend. So if this is a really positive bullish trend, which we have here, the consolidation is going to be over once we see a dip and we reconnect with the 50-day average. So we might sit up here into non-farm payroll on Friday. If we dip into support and hold, then we could see this push back up to 24 highs. Okay, so all the time we are up here, expect more movement in the dollar. We look at the pound US. You will note that in the corresponding period we have been dropping back. So any push into 130.60, well, the main resistance is up there at just under 131. If we push into 131 and fail, then this could go right back to 24 lows easily. You may not even get such a high push. You may only get 130.50. But I think the most likely scenario is a push into this trend line resistance, reconnect the 50-day average, and then tip the way back. Because we broke down from the 50. Okay, so if you're a big fan of averages, this is what you normally this is how you play averages. Once you break the 50-day average, the first test of a 50-day average is normally a fade. It's normally a sell. So there's the breakdown through the 50. If we consolidate and go and retest the 50-day average, that is likely to be the route to seeing the pound sink. If we hold this 130.50 at any point, get a significant, like we did here, if we come back and hold this area here on volume with a higher close, then expect that to push back up to 134, 135. But my uh, trade idea here at the moment is to sell any push into that area there. 131.40 is what the average is showing at the moment, and that's what I suggest you look just to do for this pound. Let's look at the gold now. My internet seems to be very slow today. Can't delete these drawings at the moment. Bear with me one moment. By all means, let me. What's going on? Can't even move my mouse at the moment. Right. Okay. Let's move on. Um, Gold. I still make looking at gold. So you can see gold is right at the top of this channel. I think gold is very vulnerable up here. It's been riding up against the dollar. If so we had a significant close underneath this on the 23rd of October, last Wednesday. So all the time, if we just push back into the high of that 23rd of November, um, around the 27.50 mark and close lower, I think the gold is going to see could at least come back to the bottom of this channel, which will take it about 20, at least 2,600, maybe lower. And if we break out of that, then we are heading significantly lower. So if we hold this 27.50, close above 27.50, then expect this to go to through 28 and head towards that 3,000 mark. It's trending. It's in a, as you can see, obviously a very strong trend. All these pullbacks have been bought. So way back here in June, you can see the bullish consolidation here is an example of it. Let's talk about consolidations today. Here's a bullish consolidation. So you push up, you wait till the 50-day average catches up, you push up, get too much resistance, so you pull back in. See, then you go into this consolidation period. And the consolidation was over down there in late June when we came into major support at 2,300 and then went on another leg up. Same process. Resistance up there at 24.85. We pull back to 23.55. We consolidate. 50-day average catches up, and then we go on another leg. So if we are going to consolidate, if this is a bullish consolidation, at the very least, I would suggest we need 26.90. 26.92, which was the September high. So I can very easily see the gold touching at 26.92. If that will enable the 50-day average to catch up. And I'm talking about the coming days. I'm talking about into Friday potentially. If that's the case and we hold, then expect 2,800 and 2,900 and possibly 3,000. If we get a significant close lower and we stay underneath that 2,700, then this runs over. I don't know what's going on with my PC today. I'll check my internet speed, but I've got a lot of problems today. All right, let me get rid of these drawings. Right. So, where are we? Yeah, I mean, already today, or well, and ever since we pushed up there and pulled right back on the 23rd, this 27.45, 27.50 is struggling. Okay, we are full 5 days knocking our head up against this and struggling to get through. Right, let's look at the indices. Dow, let's try and speed this up a bit. Dow looks a little bit like gold up here. A sell signal. Ah, there you go. Sell signal on the 15th. Make a new high, another sell signal. And here we are. We've met up with this 50-day average. So potentially yet another bullish consolidation. Um, so it looks very much like we can see, I think we'll see 43,000 again. So if we come into 43,000 and sell, um, in other words, we've broken down underneath this trend line. If we pop up and come into the underside of it, and again, I'm talking about days ahead, then I think we can see a significant um, potential corrective phase. So at the moment, I'm suggesting you buy pullbacks, 43, 250 um, is, we actually gapped up, haven't we? Yeah, so we gapped up. So this recent low midday UK time reconnected with the gap up level, the 42 200. But a full gap, I think we're going to come and see what would be very nice and make life a lot easier if we came down and tested that 42,080 again. And possibly even the Friday low again. That would make life a lot easier if we came down there and got a higher close. Okay, so that's the bullish scenario. We come down and test those Friday lows again and hold. The bearish scenario is um, some one day this week, whichever, doesn't really matter which day it is, but if we break that 42,000 and close under 42,000, then the corrective period is underway. But my expectation is to go into at least 800, potentially back up to 43,000, at which point I would definitely look to short higher up. So for me, this is wave one, corrective wave two, and then a decisive move three, and then subsequent pullbacks could get sold into as well. That's the bearish scenario, and the bearish scenario is based on this action here, based on the fact that this is wave one, wave two is a pullback, and wave three is the significant move. Okay, so let's have a look at UK FTSE. FTSE, on the other hand, look, has come right into that 8,200 today and done a 100 pip turnaround, more or less. So incredibly bullish. So there's the trend line support. There's the trend line resistance. If we pull back into 8250 and hold, then we could be coming up to 8400 plus, 8500. Really choppy. We've seen some very engulfing bars, only to see this turn around and pop back up. So it's been, I mean, if you're trying to trade the FTSE, wow, this has been ever since we did this break up here. So look, you see, another example of consolidation. Big push up, you go sideways, then you pull right back to support, catch up with the 50-day average, and then you go on a run. So this is a massive consolidation, a deep pullback, gets bought, and then you go through another consolidation period. So close above 8,300 on volume, and we should be going to see 8,500. Whereas the Dow is still got some upside, but if I'm right about wave three, that should be a significant wave three. Right. So let's have a look at oil. Gaps down. So any pullback into 70 now, $70, should see this. So if we may not even backfill, but ideally backfill to 70 and then go and find 65. If that fails, it could be coming to find 58, 78. The bullish scenario is if we find ourselves holding 70, then I think we're going back to at least 75. So stick with the bearish scenario at the moment, concentrate on selling on the gap fill. And then if we get some sell signals around the 70, 50 mark, that's your opportunity to sell. If you want to sell, I would concentrate on the indices personally. But that looks at this stage that looks lower unless we just hold that 70 and on volume. All right, let's have a look at pound let's just go back to currencies a second because it's pound yen. Um, what an incredible run. I suggested that this 183.80 was a buy. So I'm talking about the Dow doing getting ready for a big wave three to the downside. This is the reverse. This is the same pattern, only to the upside. Significant move up. Wave one, wave two is the pullback, and then we're still effectively in wave three. That looks as if we're going back to the well, we're within spitting distance of the 200 now anyway. But so this pound yen is very viable. Any pullback now to 19750 could see that go through the 200 and back up to the highs. Okay, right into stocks now. So any stocks you want to look at, start punching them in. As soon as I can get rid of this drawing, I will move on. Right, BT. Pull very neatly back into support. Very bullish consolidation could be over now. If we can, so this 140 is major support. We broke up here in September 11. If we can turn around and close above 145, we should get through 150 and potentially go back to £2. Close under 140 and then walk away. Short term, walk away anyway, because that looks as if that's done. If it does that, and I'm going to flit around a bit here. CPU. Had another very recent push into 22. We're currently down there at 19. As long as we can close back above 20, that looks as if that's got more juice. That looks as if that could go to 25 and more if we can get back above 20. But this 2022 is a tough spot. I don't know what you mean by that. Bit of a short name. Uh, what is that? I don't follow. Um, Moving on, let's look at Taylor Tullow. This is to me this is pulling back into major support, but if yeah, that was a definite trend line at 25. Hitting 25 and closing under 24 is concerning. Um, if we don't close back above 25 soon, then that's in trouble. Right, Phillips. Okay. Um, let's look at talk about this one. I'm in this one. AMS, Advanced Medical Solutions. Um, so significant dip into Friday. We are clinging on. We obviously need to get above £2 now. If we don't get above £2, then you may need to, if you're in this, any break of that low, 190, and a close lower tomorrow, and that's going to see 175 at least. Close above £2 in the next 24, 48 hours, and that should start to climb again. See, we're under the 50-day average, so this has got to go right above 225 to get the right side of that 50-day average. So let's see if we get this sort of pattern that we had in April, then bingo, we could be onto a good one. But in the meantime, if you're in this, be cautious. Prudential, trying to, yeah, it's not a bad close today. We've got to have a significant close above 660 at least. Otherwise, you may need to cut that one loose as well. So it's some nervy action on the markets at the moment. Right, moving across, I have a list up. Let's go back to telecoms and look at Vodafone. Vodafone's getting very interesting. We've got decent volume up there last couple of days. Close close above 75, and that could start to climb back to the pound. You see the ball flags. So we've got a push up here on the 6th of June. Then we drift right back into early August. Push up, and now we're drifting. Now we're pulling back again. They close above 75, and I think Vodafone looks good. Let's see, direct line. No, that is looking like that looks like it's going to come all the way back to 150 at this stage. If this doesn't turn around and close higher above 170, 172 in the next 48 hours, be wary. Let's look at the oil stocks, BP. That gap down on the weak oil has taken that back to support. Um, Close underneath 385, and that's in trouble. Close back above 405, and that could ping up. Shell must be the same. Yeah. So they're these are under the 50-day averages. So they are officially not bull trends. Then they are not in bull trends. In my book, any market that can't, any daily chart that can't sit above the 50-day average is bearish. I will trade stocks under the 50-day average, but as long as they build and react in the time frame that I need. MSTR. I'll come to Phillips in a minute. Wow, that is stomping away. Very significant buy signal there on the 9th of September. Going up on volume. So it's making new highs and it's got significant volume to back it up. So as for a target, wow. Um, if you guys are in it, what's your target if you're in it? So it looks like the 30 mark. If we hold above 25, that looks as if it's going to 30. And what's the other ones I want to look at? Hang on. Um, IQE. Okay, let me go. Wow, that's had it. And we can see after that push into 19, the volume just fell off. So the volume was telling you there's no follow-up. I have to say, I'm not in this at the moment, but if I had bought that back at 18, I would have had a stop on the 16, so I'd be out now. 14 and a half is this one. So we look as if we're coming back to 13 at the moment, and there is no volume coming there to support that at the moment. Burberry. A friend of mine is looking at this one, is in this. I'm not in it. Uh, Certainly seeing increased volume on that Burberry. I do not like that stock. I don't like the sector, not necessarily the stock. I don't like the sector. Right, Phillips. Um, which one are you looking at? You mean that one? Let me go back to your message. Phillips Conjenk. Phillips Conjenk. Don't know that. This the one? Right. Um, well, next stop looks like 2384. Some if it keeps going, I'd expect that to go to 19. I expect that to go back to this breakup area. You've got all the support down there at 23.38. If you're shorting it, wow, nice short. And there's um, definitely a reason to short that. A lot of lower closes up there, especially Friday's close was a clue. Um, I would expect that to come all the way down to 23.38. And then if it is going to turn around, that's where I would guess it would turn around if it is going to turn around. That will be a repeat of 29th of July. Anything else? I'll just summarize in a minute. So yeah, there's a lot of going on. Nerves in the UK because of the um, budget on Wednesday. Um, Seeing a very strong dollar with a Dow that's already come off significantly. So I'm just looking to sell into this 21st area up here. So I'm just yeah, at the moment there is this pullback is viable because we're just potentially just consolidating back into that 50-day average. But if we get back to the drop zone and sell, then that's the point to get short and stay short. But we'd have to close underneath 42,800 once we'd retested those highs if that scenario is going to work out. Otherwise, gold is somewhat vulnerable up here. Um, Oil, I would steer clear of. Oil stocks are getting beaten up because of that gap down this weekend, well, this week as well. Um, so yeah, just be cautious. I am just managing a few stocks at the moment, not um, really adding up. Adding up. Happy to sit in a quite a high degree of cash at the moment, and let's see what happens as the week unfolds, and especially as we come out of the budget. All right, thanks for your company, guys. Hope that helps, and I will talk to you soon. Thanks. Bye.